Hello, I'm Cristina Marujos, and you're watching the Daily Market Comment at xm.com by Marios Hadjikyriacos. Markets continue to trade in a relatively quiet manner, with limited movement in most currencies and stocks, as investors remain weary of increasing their risk exposure ahead of pivotal events this week, most notably the Fed decision tomorrow. With a rate cut by July now fully priced in and another one by October, expectations are riding high that the world's most important central bank will adopt an outright dovish bias and lay the groundwork for an easing cycle. Today, we will hear from several key central bank officials attending the ECB's forum in Portugal, and traders will look for any signals that other major banks are planning to join the Fed and loosen their policy soon as well. As for the market reaction, Draghi has already delivered some introductory remarks, which sent the euro lower as he reaffirmed the ECB's willingness to act if the outlook doesn't improve. While the euro could still move a little lower in the immediate term, the bigger outlook for the currency seems to be improving from a relative perspective. The ECB doesn't have as much ammunition to ease as the Fed does, implying that the downside in the dollar would likely be bigger in case both central banks start loosening. The British pound underperformed on Monday, though it has stabilized somewhat early on Tuesday, ahead of the second round in the Tory leadership contest, a race which Boris Johnson is leading by a very wide margin. A debate between the most popular candidates will take place in London later today and could prove crucial for the sterling. In general, it's difficult to see how any contender can close the gap on Johnson, and since he is clearly comfortable with a no-deal Brexit, the pound's troubles appear to be far from over. The Australian dollar is on the back foot on Tuesday, falling to new 5-month lows against the greenback, following the release of a dovish set of minutes from the RBA's latest policy meeting. Officials highlighted that further easing of monetary policy is likely ahead, noting that developments in the labor market will be especially important for the decision-making framework. Another 2 RBA rate cuts this year are practically fully priced in, and absent a major breakthrough in the US-China trade saga, it's difficult to envision any near-term sustained rebound in the Aussie. This was today's Daily Market Comment at xm.com. Have a great week.